Hi, Bo here from High Tech Investment, and welcome back to the channel, where in today's video we're going to talk about AI and exactly how AI have actually helped me in my trading, asking some few simple questions and then basically see what is coming back from that particular one. It has certainly improved it, and that was the whole idea. So what exactly are we talking about? Well, we are talking about the EAs that actually have grid trading, and I have made an entire series of this, both as a general grid trading EAs and videos in here. So this is the first one I actually did, which is part of a full playlist that also covers further details regarding gap size, lot size, and then also the individual EAs in here. Now, there was something specific that I actually asked, so the AI in here, and because we have, for the profit retrieval technique we are using on the grids, we have been using 120% for the last year or so. Then in the summertime, we actually found that the profit went away from us. It used to be 8 to 10%. All of a sudden, it dropped below that one for several months. And that made us question again, can we actually improve on our results in here? So the whole idea was that AI was going to teach us a bit about it. That meant that I had to load some of the details, information regarding grids, try and explain to this particular one, the chatgpt that I used chatgpt 5 in here. It can be a bit frustrating at times, and sometimes you even had to go back again, start all over to try and explain exactly the grid, the martingale strategy behind it. And then after that, explain, well, we don't exactly want this. We want to have certain parameters in here that ChatGPT was supposed to check to make sure that we could increase actually our profits, and at the same time also try and reduce our overall drawdown. And we actually succeeded with this, and that was this video is all about here today. So what exactly are we talking about here? Well, I'll show you on this particular graph. This is the very simple, standard and basic martingale strategy. Obviously, we don't want to use that one. That is extremely dangerous. But certain parts of it we have modified for these particular trades. So it's been a lot more sophisticated, and it can actually handle some of the drawdown that you will get. But the simple one is normally that you put in a trade. If the trade goes with you, that's great, you are cashing in. But if it goes against you, then the next thing that will happen is that as a predetermined grid measurement in here, it will start putting a second one in, and that will then be at a double lot size. And then when it continues to go against you, it will double the lot size and put in another grid, and then it will move down through the grid system in here, and then hopefully at some point, as you can see, doubling all the way through. Then at some point when you have a retracement, then it will cash in, close all the trades, and then start over again. So obviously with the lot size going up like this is certainly not something we are using. The system we have been using here is the start lot. We are starting off a lot smaller, as you can see, 0.03 normally, and then we increase not to the double, but we will increase 104%, so basically 4% on each grid level. At the same time, we're also doing the gap scaling, so not the same range as you can see we have here on the screen, but it actually increases every single time with a 20%, so 120%, and then 120% for the next one again. That keeps a lot longer range, and at the same time we're actually also keeping the percentage on the lot side under control, so we don't get a huge drawdown. So to illustrate the difference in between how we actually trade today and how we're going to trade in the future, so I've just put this little Excel together, and for the numbering system over here, that is the first entry that we do, similar to what we saw before. We put in a buy, and then our initial gap size is 100. The gap scaling we're using today, 120. Then we have an average, basically putting all the different systems together so you can see an average. That one shows when we actually have the turnover from having a lower drawdown today versus higher drawdowns. Total gap is here. So that is the simple system. So after the first trade we set up, The first gap initially will be 100. If the price continues to go against us on the second trade here, we'll then come in at 120 on the next time. So basically continue to increase by 20% versus the last one. And you can see right now here, we have two set up. Average is 110 pips and total gap is 220. And then we continue, it's opening up. So as we are setting now the third buy in here, the third gap is now 144. Average now goes up to 121. Total gaps since we started off with the first buy, 364. And then it actually increases. And normally what we have is we try to make sure that this particular gap, so that we are going for, is depending on, first of all, the currency pairs that we have in here, because some are only moving 800 or 900 pips. That is the maximum range we see. Other ones like the US Japanese or other Japanese currency pairs, some of them have gone all the way up to 2800. So I'll give you a bit more information on that when we have a look at the individual currency pairs. This is simply just to show you the basics that we have in place now. So instead here now we are going to the gap scale of 140. So that means that it will now increase. So in order to actually gain some advantage, because if we don't change the gap in here, make it smaller, we are obviously not increasing profits. So we want to make sure that we do that, but at the same time we still continue to be safe on the drawdown. We don't want to have any higher drawdown than absolutely necessary. So in this particular case in here, we have taken 30% off. Normally it lies somewhere around 30, 35. So for this particular one, we have the initial gap of 70. And again, next one, as we are then coming here, and you can have a look at the original scale at the same time. The second gap now goes up with quite a bit more. So basically you have an increase in here of 28. So basically 40%. And that now creates a 84 on average. And you can see the total gap in here as we then go up. You can see the third gap, 144. We are getting close already, 137 now. So that means, of course, we are still having a slightly higher drawdown, because on the average over here, we have 121 pips. Here we have 102. So as it goes against us, our drawdown will be slightly higher, because our grid is actually a bit tinier, a bit closer, and that also means that we setting basically our trades a bit closer up. Then we go to the next one, which is now number 4 in here. Again, average 134, here is 124, and you can see the total gaps. We are getting very, very close as we are getting to the fifth one in here, and that is normally the range that we expect most of the currency pairs to run in based on the initial gap scaling. So it now means that the original one we had was 744 in total gap, or average 149. Already here we are now surpassing, because we are using the higher percentage. So that also means basically from here on, if the trend continues, which is certainly something that you don't want, but that is why people are getting caught out many times. We have the close and narrow band for where we expect it normally to be. If it then runs away for us, you'll notice here that the new section actually opens up faster. In this particular case, already here we have almost 300-400 pips extra on trade level 7. And if we go further down, you can see 1600 is the total gap, and we have already moved 25% higher up in here. So that is, well, it's actually 50%, isn't it? Up to 2,400, and that will, at the end of the day, make sure that when things are really going wrong, then your drawdown will actually be lower at the end of the day. So let me show you. So the Great British Pounds that I have in here, the test I've done, and this is a back test, so it's for the Wave Liberator. We use this particular link here. It's also on the copy link service, but it had some recent heavy drawdowns, again, because of Great British Pounds USD. It's been very volatile because of these trade tariffs from the US. You can also see the timeline we're using, 1st of March 2025 until the 10th of October in here, so quite recently, of course. Then what we are doing, because this is individual for every single currency pair, we are measuring that, and that comes back to the playlist I told you earlier on to watch if you haven't watched it before. This particular case here, we are using 2040 in here. Then we have what we call a safety margin of 120% on top to make sure that we are okay. So that means the total movement that we want to see on this particular currency pair is 2,448. Now we are splitting this down in 10. So again, we are splitting that particular area into 10 sections, and the grid gap will then be 245 in here. Now you can see there it says 86, and what we recently had is normally we divide this by 50%, and that's why we tested it off with 122 to start off with. And these particular ones up here is basically direction of trade, same direction. This one here is one of the settings, basically when it's supposed to set the trade. So it has really nothing to do with this. The price gap is 122 as we previously did. Gap scaling starts already at 1, and the old ways was 120%. The lot trade entry is 0.04, and then the multiplier for the lots also down here 1.04. So slowly and gradually will go up, not by much, but enough. You can also see the take profits that we have in here. If the trade goes in the right direction, buy and sell is allowed. Target closure, and this is where the basket of all the open trades. So when you have 2 or more, then that is the one that goes in. So basically close off with a positive of 10 pips and then start pruning at 8. We are not really using that in this particular case. But again, the main focus here is basically on the price gap we have up here, where we have now changed it, and we are using a factor of 25% in this particular case. So instead of dropping this one back down to 50%, we are only taking 35% off the 245, and that'll then get us to 86 instead. So we will have, of a starting point, a closer grid, but then also instead of the 120 here, we will use 140. So it will actually increase faster. Now, what we did was obviously we tried to optimize first during the scaling of the 120%. You can see here, this is the profit, 954. This is the drawdown, 2.28. And in this particular case here, it was the percentage was tested on $10,000 accounts. But again, as you can see here, 239, that's all of the drawdown that you have. So you can actually use this on a $1,000 account, and that's also how we normally trade it. We try to optimize it, but basically take profits, and the target closure in pip, that was pretty much stable. And then we make some changes. Again, we are trying to optimize it because now we have a different price gap. So still same direction. In this particular case here, there was a small change in the entry overall. You can see they are very, very similar. But again, because now we have the price gap, it's a lot closer, then that has to change a bit. Gap scaling we set to 140, and you can see straight away we had an increase in profit, which obviously we expected when we are actually doing the price gap a lot closer together. Again, drawdown we also have slightly higher, 2.45, and we can also see here that the drawdown of 261 has gone up for the 239, and I'll explain exactly why that is in a minute. After that, here we are going also to have a look at the take profit and the closure pip. But again, this one actually doesn't really change much. So at the end, we are coming out similar style. Again, like we had before, you can see there's only target closure pip was 10, then it's 12, slightly difference in profit, so not really much. And the last test we did was simply try and run again the price gap just to see if the price gap was reasonable, if the percentage we used up here before, as I said, 25, percent instead of 50 that we had. Then we said, okay, where are we going to end up? But it looked like that 35% of the 245 is the right level when we're also using the gap scaling rate. So after this has been optimized and checked, you'll notice that we made $268 more in this particular way, but at the same time, we also had a higher drawdown of $22. Overall, if we take it over in percentage, we actually made 28% more. Again, this is backtesting. This is not real life money yet, but it gives you a very good indication. Also, you can see the drawdown also goes slightly up with 9%. And again, the reason why this is actually going up is you are keeping within these 4 or 5 maximum grids, as I showed you just before. And that's where you will have slightly higher drawdown. If you test it out on a currency pair, then most probably if you have entries of 7 or 8, then it will actually reverse. That one here, the additional 120, will have a higher drawdown than you will have on the 140. So that was that first exercise in here. So what actually happened is on that test, we had the initial gap of 122. Over here, we have 86. So again, we are following it down on the second trade. Average 134, here 103. So again, as we are hitting the fifth one, and that is exactly the calculations that we wanted to make, by the fifth one in here, the gap scaling of 140% should actually be the same or slightly higher. And that's what we had. Average gaps from the grid is 182 after 5 here. And on the 140%, it's 188. So that means as long as you keep within the first 1 to 5, you will have a slightly higher drawdown. But if the price really starts going against you and the currency pair you are trading is basically running away, then you have a better chance of surviving this particular one. As you see, it opens up quite significantly if you are at around 10 entries here. So then you are certainly in trouble, and you now have a range of 3,164 pips. But this particular one over here can actually manage 6,000, almost double as much. So that gives you that extra leverage. So yes, drawdown is slightly higher when you only have a few trades open, but when it really matters, then that's where it is. It opens up and making sure that you might be able to survive. Now I've taken the liberty of doing a second one here for you. So the first one is still the same that we have here, Great British Pounds USD, and the second one is Great British Pounds Swiss francs. Again, it is the Wave Liberator. You have link 1K 165C up here, and again we're using the same timeline for it. The longest trend that we have set this time around, you can see is very different from the first one here, 2040. So that is a lot more volatile. The Great British Pound Swiss francs, well, we have done the measurements and we are running with the scale of 1250. Then we use our safety margins of 120% in here. That provides the 1500 we're looking for. We again divide it by 10, and then we get a grid gap of 150. And then from there on, we divide it with 50%, and that's why we get, well, it should have been 78. We are running, should be 76. We are running with 78, but that's close enough. But because we are using the 30 or 35%, in this case 35% seems to be working out, we come out with the grid gap of 54 instead. So again, similar way, all the orange is the one we are testing, and we are testing it on the 120%. You can see 714 drawdown of 1.52, and then $165 in drawdown as the maximum. And then we are testing it again. It looks like we didn't mark it up, but these two were tested. They were the same, so price didn't really change. And then we started to test off with the new grid gap of 54. Again, we are using the entry points. We're ending up with the same one. So reverse drawdown 108 in this particular case, because that's what the Wave Liberator actually does. Again, gap scaling start 140% instead, and everything else is also the same. So 16 and 12. So for the take profits 16, and then target closure and pips 12. You can see all of a sudden we ended up with a lot more profits, 1151. The percentage on the drawdown is slightly up, 1.68. And also the dollar amount from 165 to 182. We do some further testing in here also on the new, figure out that this is still very good settings. Overall, they are stable settings. And then what we did last was also trying the price gap versus the gap scaling. So again, trying from 60 and up, and also gap scaling 120 and up to 160. We figure out again, those particular parameters seems to be working the best. They are the most stable. We're getting most similar results right around here. So the numbers are looking really good. And then when you look at the difference on the profits, $434 this time around, or an increase actually of more than 60%. So that's quite a lot. And again, this has something to do with the trends, of course. They are different ones, but also the way they have operated in this particular time frame in here. So you obviously won't get the same test results if you are testing on various currency pairs. We also have a slightly higher, again, drawdown, so $17 in this particular case here versus the 182. So that's an increase in drawdown of about 10%. But again, when you have an increase on profits 28 and only increase in drawdown by 9, same over here, increase in profits by more than 60% and only a drawdown increase of 10 around here. That is quite good, because again, the drawdown that you have is within the first 4 or 5 rows, the first 5 entries on the lot size. After that, if you have a runaway in the real live demo and live testing accounts in here, the drawdown will actually be a lot slower going up on the 140% than it would be on the 120. And we still have the benefits of more profits at the end of the day. So this seems to be some very good parameters that our ChatGPT has found for us. So as you have seen here, the ChatGPT can certainly be very, very useful also for the Forex trading, in order to understand and basically have a bit of a conversation with this particular EA in here. Even sometimes it's not really talking to a human, but is very good at breaking down some of these trade parameters that we are looking for, trying to see how we can actually optimize our settings, because again, there is a difference in between the currency pairs that we are using. You cannot use the standard all the way through. So constantly you have to both backtest and obviously also forward test, which is already on the way here now with some of the settings you have actually seen here today. So it's all about riding the gains, try and squeeze the maximum out of it. Ask yourself all the time, are we doing enough? Can we do anything differently? And that's exactly the question we put forward to the ChatGPT AI in here. How can we do it? What do you suggest? And then we try it out on our demo accounts. Once we are happy with it, then we'll launch it over. So to some of the other trading bots, of course, and you will be the first one to see everything, following both on our news report on a weekly basis, but also on our website. You can always go there. Everything is for free, and you can click your way through some of these particular signals that I've shown you here today to see if they are actually going to do better in the future or not. But don't forget, you and you alone are responsible for your own trading and your own investments in here. So try and do similar to what we do. Obviously, ask the questions in here, test it out on demo accounts. And then once you are done with the back testing, put it on live real demo accounts again. If you are getting the results that you expected to have, then from there on, you can actually move to real live accounts, real money. That is the process we have in place. And we certainly suggest that you do something similar. Otherwise, you can go to a financial advisor, of course, and get more detailed information. This is only the way we are doing it in order to try and basically get the most out of the Forex market. So I hope that this has been a very good tutorial on how you can actually improve your signals, even though we've been playing the same settings and the same concept in the last year. Basically, we found a bit more to squeeze out of all our EAs in here. And I hope that this has been great also for you to see that there is opportunities and possibilities going forward. And obviously, I would like to hear back from you. Have you already found some of these hacks in here? What are the percentages that you are using? Or have you tried the AI in other different sorts of ways? So I hope that you enjoyed the video. Please give us a thumbs up and a comment, and hopefully I'll see you on one of my other videos in the near future. Until then, bye bye.